Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So, big week in the markets. The Fed decision for June is out, and expectations have shifted pretty significantly. At least 3 rate cuts are expected in 2024. Let's discuss the implications of that. Long duration bonds. Cash has been king for much of the past several months to start 2024, but long duration bonds are showing life again. And finally, weak economic data towards the second half of the week are sending stocks lower Thursday and Friday. All right, so at least 3 rate cuts are expected in 2024. This table is a chart of the probabilities from Fed funds futures contracts. These are contracts that buyers and sellers can transact, and from these transactions, we can calculate probabilities. I want to point to a notable area that is highlighted there in the box for 12/18/2024. Why is that notable? That is the last Fed funds meeting of 2024 for the Fed to make any changes. And we can look at what is expected in terms of probability. You can see 8.7% probability of the Fed funds rate being at 4 to 4.25. Remember, the current Fed funds rate is 5.25 to 5.5. That means 8.7% probability that the Fed funds rate, looking at 25 basis point cuts, could actually be cut 5 times. Now, if you look at that 4.25 to 4.5, that says a 37% chance of a four rate cuts, or potentially at least 150 basis point cut during this last part of the year. Add that up. That means the probabilities of at least 4 rate cuts, or 1 full percentage point of cuts by the Fed, that would include at least 150 basis point cuts, because they only have 3 meetings left this year. That has moved from 5 to 46% probability. And the probability that we get a rate cut at every single one of those meetings is 86% right now. So that has shifted dramatically from the Fed starting to comment that they're using the word September. They're talking about the employment market being in better balance. Inflation data after that lingering inflation in Q1, Q2 has showed significant decrease in inflation toward the Fed's long-term target of 2%. The combination of all that, along with a softening labor market, we'll talk about the data here in a moment to end this week, that has sent stocks lower. All of that is sending these probabilities higher that the Fed's going to be cutting in September and multiple times at the end of this year. Now, in response to this, we've seen interest rates dramatically move down across the curve. Ever since that July CPI report, that has really kicked off these increase in expectations, and we've seen data that's beginning to support that I just talked about, the Fed comments as well. Look at that, Q3, the ag, that's going to be around a 6-year duration versus the 3-month treasury, which is going to be kind of a cash proxy. If you go all the way back to the fourth quarter, we had the dramatic historic decline in interest rates when we saw really low inflation and softening strong economic data, a pretty middle of the road economic data. We had a really strong rally in long duration bonds because everybody expected the Fed to be very accommodative. That was reverse course during the first and second quarter as rates went higher. Remember, the expectations at the start of the year were for interest rate cuts to be 6 or more. At some point during Q1, we were talking about 1 to 2 rate cuts, and now we're back up in that 3 to 4 space, and you're seeing rates move lower, and you're seeing bonds on the longer end of the curve finally start to outperform cash again by a significant margin. That's one of the big implications. Now, stocks have held up relatively well in the face of these changes, but some of this weak economic data toward the end of the week has really brought the sellers out. 2 major data points. The July ISM manufacturing report. This is a survey of manufacturers from different categories as far as their expectations for new orders, employment, inventory, supplier delivery times. It dropped to 46.8. That is below the 48.8 expectations. That's the lowest reading since November 2023. And take a look at that far bar on the right. You see the different colors. You can see a decline, significant decline in employment that we haven't seen recently. You can see inventories are being depleted. Not a really good report. You're starting to see people not only expect the Fed to cut rates, but there's starting to be some concern that perhaps the economy is in the midst of a contraction as we speak, and perhaps the Fed's a little bit behind the curve, and you're seeing equities sell off. Now, in combination with that ISM report, we also got the initial jobless claims. This is a weekly report that comes out every week. It's notable because it had 249,000 jobs. That's above expectations. Only one data point. We get this data point every week, but that's the highest that we've seen since August 2023. When you combine that ISM report and this weak economic labor market report for the US and this weekly jobless report, after the market's strong run it's had in 2024, we've seen continued selling, even especially in that small cap area, which has really been outperforming here recently in the face of lower rate expectations. A little bit of a concern that perhaps that soft landing that perhaps people were expecting with these rate cuts by the Fed could be in jeopardy. Just one data point, but something to see, because we're starting to definitely see the labor market soften. Remember, unemployment rate up to its highest level since November 2021. So all that to say, odds of a recession creeping up a little bit here in the near term. Let's wrap this up with an important ruling from the Ohio Supreme Court. Apparently, consumers cannot expect boneless buffalo wings to be free of bones. Now, this was a divided decision. There were 4 in favor of this ruling and 3 that were against. This came from a claim from a defendant who was not a defendant, but a customer, rather, of a restaurant who suffered some injuries in their throat after they got a bone stuck in their throat after eating what they expected were to be boneless wings. So dissent, but apparently the Supreme Court, these are the important rulings that we're getting from them these days, and I'm not sure I agree with that. To me, I mean, just using the English language, boneless sounds like the absence of bones, but I guess I'll defer to the law, to the Supreme Court. We'll see if this makes it up to the federal Supreme Court anytime soon. With that, I want to thank you for watching, and I'll see you next time.